Oh, yeah. And we are ready. Oh, check out who's here tonight. Skrid 61, cool. Pumar Ocean, Brandon, Lloyd, what's happening? Robin, Pressure Roadie, I have none. What's up, Jay Styles? What's going? D Coffee, Dave, Doc Hollywood, what's happening? Mojack, all right. Lonnie, Multi, cool. Look at all these people showing up. KG, what's happening? Nahish, good morning. Please be advised to trade every day or I have to choose a special day to trade. You can trade any day you want. I usually do all my trading on Mondays, but you know what they say. Is what it is. Oh, righty. Let's do this. You were wrong on Nvidia and Google. I don't think so. I'm pretty sure Nvidia's dividends are 1 cent and the book value is like 174. Now, I don't know if I'm wrong. Well, let's find out. NVDA. Okay, we'll take a look at Nvidia. Let's see if I am wrong. Okay, here's Nvidia. Look, we got the numbers up different way. All right, so we're going to take a look at statistics on Nvidia. Okay, take a look at the statistics on Nvidia. Okay, see that right there? Current book value. Book value per share, $1.74. Not wrong. Yahoo Finance, it's right there. Okay, $1.74 for Nvidia. Okay, and what is the next one? He said that's something. Nvidia, and what was the other one? Google. Yeah, hold on. Good evening. Good to see you again. Thank you, sir. Wonderful, wonderful to be here. So, Nvidia has $1.74 book value. Okay, let's check out the summary. Find out what the wait a second. Let's check out the dividend. What is the dividend? The historical data for Nvidia. Because, you question my integrity and it bothers me a little bit. So, here we go. Nvidia, $136.24. Okay, this is the data stream. Okay, the open, the high, the low, the close, the volume, the date, the month, the year. Okay. Now, we want to take a look at just the dividends for Nvidia. Now, am I wrong, or does that say 1 penny? 1 penny, 1 penny, 1 penny. Yeah, I'm not wrong about Nvidia. What's your name? Really? You come to my show and it says, good afternoon, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, and then you're asking what my name is? I don't know. So, I'm not wrong about Nvidia. You just don't want to admit it. The dividends for Nvidia is absolutely horrible. The stock price is $130. The book value is $1.74. So where was I wrong? I'm kind of curious. Now let's take a look at Google. Okay. All right. Dividends. The maximum amount of dividends paid. Google has paid 3 dividends. Not 3 years, not 3 decades, 3. That's not even 1 year. That's 3 quarters. June, September, and December. That's it. How can you possibly say that is a good investment? How? The dividends, 3. 3 dividends, that's it. Would you watch a tree grow? Yes, I would watch a tree grow. Depends what kind of a tree it is, of course. I've been watching my avocado tree. Started out as a seed. Now it's only about 2 inches tall. It's getting there. Eventually, hopefully by the day I die, I'd like to see an avocado off the tree. Is what it is. So I'm not quite sure why you're saying I'm wrong about Google and NVIDIA. Google has 3 dividends, not even 1 year. Okay? NVIDIA has dividends, but they're 1 penny. Let's check out the book value for Google, just for the fun of it. So Google's going for 196. $196 per share for Google. They probably have a higher book value. Okay, so the book value for Google is $25.61. So when you're buying something, you've got to figure out what is important to you, which company you decide to put your money. Now me, I want consistent profitability. Well, I want a company that has proven itself for at least 2 decades. That's 20 years. Okay? Now, 20 years of consistent increased dividends. Well, NVIDIA is not going to make it for another 19 years. But this year, they have to pay a higher dividend than last year, which really ain't that difficult because last year, they only paid 1 penny per share. All right, so I'm going to get off of NVIDIA and Google. I don't like either one of them. I don't know why people keep pushing me on the issue. All right, so let's take a look at what you guys want to take a look at tonight. Sherry, how are you tonight? Lonnie, what's happening? Jay Styles, what's going on? Roses, how are you? KG, what's happening? Cher, interesting, nice to see you. Riley, Botox Doc wants to take a look at Riley. All right, let's take a look. R-I-L-Y, Riley. Okay, here we go. Riley last year. Now, I'm going to go through the whole spiel with Riley only because I do own a bunch of it. So why not share the wealth, you know? A year ago, $22.88. That's where it was a year ago. What's up, Sweet Jones? What's happening? The high of the year, $40. Okay, so from $40, she drops all the way down and then makes a big drop. And look at this. She's going sideways basically for the last 4 or 5 months. Just sideways. Okay? Little down, up, down, up, down, up. Look at that action. Now she hits the bottom right here. The new bottom of the year. Right there. And she's jumping up off of it. I love it when a stock bounces off of a 30-day bottom. Because what does that mean? Well, it means you're going to make your most money buying low and selling high. Well, you can't get lower than a bottom of the year. If that's the bottom of the year, well, fine, I'm going to take it. Okay, we don't want to go to the 16th. Okay, that was 30 days ago. And look at where it is. 30 days ago, we're at $5. She shoots up to $5.35, drops all the way down to just below $4, and then shoots back up again. Okay, so what are you thinking? Do you like Riley? Well, what does it normally do this time of year? And to find that out, we want to look at the seasonality chart. Now, the seasonality chart, well, that's basically what has this thing done year after year after year after year. Go 10 years worth of data. That's 2015, 16, 17, 18, 19, so on and so forth. So 10 years. So the red line is the average movement. The blue line, this little tiny thing over here, well, that's the movement this year. So let's zoom on in because way over here to the left is January 1st. Way over here to the right is December 31st. So I want to look at just the month of January. But no, I really don't really care what happens for the rest of the year because the rest of the year will come eventually. I'm worried about this week and next week because I want my cash flow on a weekly basis, not on a yearly basis. So yeah, it's nice to see what it normally does, but what is it going to do for the next week or two? Well, how can I take advantage of it? See, so here's January. Now, this is the 10-year average. Look at where we are. Now, it's really not that difficult to see. Riley has a little bit of a hump here, and it starts to pull back here. Just a tiny bit, though. But more or less, just kind of going sideways. No big movements to the upside. No big drops to the downside. Just kind of stays right where it is. All right, so fine. So currently, it's at $4.84, the stock price. $4.84. Well, if I buy it tomorrow at $4.84, the closest strike price to $4.84 is going to be the 5. Now, I do a simple trading strategy. It's called covered calls, where I buy the stock at a certain price, in this example, it's $4.84. I sell my rights for someone to buy it from me for almost the exact price I just paid for it. Well, the closest strike price to $4.84 is going to be the 5. Okay, so here's the strikes over here. 2, 250, 3, 350, 4, 455, so on and so forth. Well, currently, if the stock's at 484, the closest one is going to be the 5. So the 5 is right here. So let's do one so you can see what it looks like. Open this up right here, come to covered stock, boom, there it is. The 5 is right there. Check the 5. There it is. Here's the trade. One thing I like about this trading platform, it's not a software, it is a trading platform called Thinkorswim. So it automatically fills everything in for me. All I got to do is go in and fill the details. Well, how many shares do I want to buy? How many contracts do I want to sell? And it's very important you use the right terminology. Because if you say, I want to buy all these shares and I want to buy all these contracts, yeah, you're doing it wrong because it's just not going to work. Okay, so it's always, always have to repeat what you read. Okay, so if it says this right here, I want to see what the order looks like, and then I want to say it out loud so I can hear it. So that way, am I seeing and hearing the same thing? Because you may think it sounds silly, it sounds funny, but you'll be amazed the first couple of times you think to yourself, that didn't work right. What happened? A lot of people, and trust me, I did it too. You hit the wrong button. And that's what people lose at first. That's what people lose the most, by hitting the wrong button. All right, so I'm going to do just one contract. All right, I'm going to change this over here, just to one contract. And I'm going to buy it at the market. So there's a difference between a limit order and a market order. Now, when I'm buying for the first time, I buy on a market order because the stock and the option are connected together when you're doing a covered call this way, because you buy the stock and you sell the option immediately after. So it gets filled immediately after. Now, when I say I want a simple, safe, predictable, when I say predictable, well, I already know what I'm going to make on this trade before I even do it. Most people will buy the stock and hope it goes up. And at some point in time, they think, okay, that's enough. No, here I know what I'm doing before I even do it. I know how much I'm getting on a rate of return. So let's take a look at the numbers. First and foremost, always read the order out loud to see if it makes sense. Buy one, covered call, Riley, 100. That is the weekly. 17 January 25. Well, that's this Friday. The $5 call strike of Riley at the market to open. Well, that's the order. Does it sound right? All right, next is the break-even point. Well, the break-even is $4.59. Okay, $4.60. Okay, so right now the stock's at $4.84. Well, $4.60 is a lot less. So you're telling me if I do this order now, I can make more than 1% for the week, and my break-even is lower than my purchase price. Well, that just makes sense if you think about it. If I'm buying it at $4.84, I'm selling it at $5, or I'm selling the rights for someone to buy it from me at $5. I'm collecting this premium, and my break-even is actually lower than the current strike price, the current stock price. All right, well, how much am I making? Well, this contract, you're only getting $40.50 per contract. One contract, $40. Two contracts, $80. Three contracts, $120. So on and so forth. It's simple math. I mean, how much can you afford? That's how many you do. All right, so now I got to get my calculator. First thing I want to do is take my profit, $40.50. And I want to divide that by what is it going to cost me. So what does it say here? Cost of trade including commission, $460 per contract. One contract, $460. Profit, $40. What kind of rate of return is that? Well, you take your profit, $40.50, you divide it by the expenditure, $460. So $460, comes to a grand total of 8.8%. Well, that sounds good. I'm going to write that one down. Wait a minute, it's already written down. And it's circled too. All right, anyway. Go take a look at next week's. I got to write it down. All right. Next, let's see what you guys have in store. Because basically, I'm going to sit here and I'm going to answer questions and I'm going to take a look at stocks that you guys want me to take a look at. And explain things if it's a little complicated. Okay, go all the way over to there. And I want to change this back to the regular. Okay, so that's back to normal again. All right. Derek, let's check it out. I have no idea what you want to check out, Derek. Ooh, Gone Fishing wants to take a look at Nucor. N-U-E. N-U-E. Nucor. All right. First thing, as always, I want to take a look. Let's move this chart over so we get a better look at it. Okay, before we do anything, I always want to take a look at the 1 year chart. Here's the high, here's the low, here's where it was, here's where it is. The high of the year of like 210 drops all the way down to 110. That's a 50% drop in the year. Okay, so what does that mean? A 50% drop. Well, it didn't drop immediately, okay? She went up, she went down, she went up, down, up, down, up, down. You know, the little movements throughout the year. But for the whole year, there's the high, here's the low. Okay, fine. Now, that looks okay, not spectacular, but is it going to be profitable if I buy it? So if I buy it, 124.95, well, the 125s actually wouldn't be 125 because look at the last price. The last price is 123. So the 123 is going from 120 to 145. That makes sense. The 125, well, that doesn't make sense. Now, you got to remember, when the market is open, these numbers are constantly changing. But what doesn't change is the math problem. What am I buying it for? What strike am I selling? Is it more than 1% for the trade? And is it the right time to buy? Because everything falls together. Christopher, when figuring out ROI, do you add in the profit from the stock? For example, the profit we bought, price, strike, not different, blah, blah, blah. No, because the stock appreciation, that's kind of like a bonus. It's not what I'm looking for. And this one in particular, look. If I'm buying it at 124.94, the closest strike price is going to be 125. It's a 6-cent difference. Do I add that in? Not at first. The only thing I'm taking into consideration is how much is the premium? Is the premium going to give me my 1%? Because if the stock price goes down, I'm not collecting the difference between the purchase and the strike price. If the stock price goes down, I'm just collecting the premium. So I'm just basing my rate of return on the premium I collect. Okay, the difference between the stock price and the strike price, well, that's usually a bonus. It's like bonus, cherry on top. Instead of getting one, we get two. All right, anyway, let's keep on going. So Nucor a year ago was 169. Tops out in the beginning of April at 203.82. Makes sense. You like that, Chris? All right, Christopher, sorry. Okay, there's the high right there, 203.82. Okay, sorry, I don't like SoundHound. They have not been in business for 2 decades yet. Until they are 20 years old and profitable for those complete 20 years, then I'll take a look at them. Until then, it's too young of a company for me to see any consistent profitability. All right, so there's the high. Last 90 days, which is the last 3 months. Here we go. The high and the low. Where was it? Where is it? Look at the movement. Down, up, down, up, down, up. Okay, so it's bouncing off this bottom down here. Okay, George, you're welcome. So it's bouncing off the bottom down here and going to the upside. Well, it looks like a good time to jump in. What does the number look like? Okay. Now, tomorrow when the market opens at 9:30, all these numbers are going to change, and they're going to change like every 2 or 3 seconds. You'll be looking at here, dividing by here, and adding there, and it's like, then when you look back and get ready to click it or hit the button, yeah, all the numbers are going to change, but the math doesn't. What do I buy it for? What strike price do I sell? And what premium am I collecting? If the premium is more than 1% of the current stock price, that's a yes for me. But that's just half the equation. That's just, do the numbers work? Well, the chart tells me if it's the right time. Well, look at this one here. This is the last 90 days. Okay, here's the high right here, and here's the bottom right there. Okay, so she's high, profit taken, it drops. Hits the bottom, it gets low enough for investors like me and some of you out there saying, holy cow, Nucor at $100? Yeah, I'm going to buy some. Because we, me and you and I, all of us, we decide what's too high and what's too low. So you can ask yourself, well, how come it only went to 170? Why didn't it go to 175? Because you and I don't think it's worth 175. Because if we did, it would have been 175. But it never hit it. And why doesn't it drop below 100? Because we think it's worth more than 100. So when it gets down to 100, we start buying. And then what happens when we start buying? It goes back up. That's basically it. All right. T. Smith. Oh, yeah, I was wrong about NVIDIA and Google. Really would love to get your input on that one. Okay, Lay, I appreciate your consistency. You've taught me a lot. All righty. All right, what else we have here? Derek. What are your thoughts on now? Now, you mean now as in the alliterative now, or now as in the stock now? I never even heard of it. And usually, if I've never heard something, it's usually going to be, what gives you the impression? Seriously, I just looked at it. What gives you the impression that I would buy anything at $1,000 a share? Seriously, think about it. If I could make 2% a week, every single week, on Ford, $9, Macy's, $15, Nordstrom's, $17, Harley Davidson, $30. If I can make 1 or 2% on each one of those, what makes you think I want to buy a stock that's $1,000? Okay? No, that's just out of my price range. I don't know. I'm glad you think that highly of me, but no. Just founded my account, almost ready to go from paper money to real deal. Oh, cool beans. I'd like to see how you're doing. George, what happens when you take just profits? Do you still have the same shares as you had before you take the profit? Okay, George, I'm not 100% sure you understand how the process works. All right? When I say profits, well, there's 2 different ways of looking at that. I got to turn the fan up a little bit. There we go. It's a little warm in here. Cold one day, warm the next. You don't? George, I have no idea. You don't. You don't what? All right, George, I don't know what you're saying, but you don't. But okay. Okay, now, all right. Let's keep on keeping on. Sorry, Derek. I don't do stocks over $250. Lindarella, can you show the seasonality chart for coals, please? Why, of course. Let's take a gander at it. I don't understand about profit taking. George, seriously, you don't know about profit taking? Let me give you a quick example, George. Let's say, hypothetically speaking, you buy IBM and you pay $100 per share, okay? Let's say, hypothetically, that stock goes from 100 to 150. That's a $50 profit, but it's only on paper. That means it's not really yours until you sell at 150 and collect that $50 profit. Okay? It's not a profit until you take it. So if you buy something okay, $1,055. If it goes up to $1,255, if you do not sell at the higher price, it's not really a profit. Sweet Jones, can Thinkorswim be linked to a Charles Schwab account? Yes, because Charles Schwab owns Thinkorswim. All right, so Kohl's. Let's take a look at Kohl's. KSS. First and foremost, I do own some Kohl's. Do you use Thinkorswim? No. I try to Thinkorswim mobile. I do have it on my phone. It's so tiny and everything's so congested in trying to get from one screen to the next. Because here on my computer, I get everything I need right on one screen. I can't get this on my phone because my phone's like a little tiny screen and this one is huge. Okay? So, yeah, that's that. All right, so Kohl's, here we go. Now, I do own some Kohl's, so let's take a look at the numbers and see what it looks like. A year ago, Kohl's was at 26, shoots all the way up to 30, drops all the way down to, what is that? 1250. Yee. Here's the last 30 days. Look at the last 90 days, the last 3 months. Here's our high here, 21. Here's our bottom there at 12. That's almost a 50% reduction. Oh, is it good to just let the rock stock ride up? Okay, George, you really got to figure out what you want. Good morning, and how are you doing today? So, George, you got to figure out what it is you want because you can't have both. Give me a second, I'll explain it to you. All right. You're from India. Cool beans. All right. Now, if by chance the stock goes up, that's capital appreciation. That's where you put your money into a company and just sit and watch it rise over the years. It may take a year, 2, 3, 5, whatever. It may even do it in 6 months. Don't know, don't care. Not what I'm looking for. If you're looking for capital appreciation, where you buy a stock low and you watch it go up, you're in the wrong place. I'm doing fine. Thank you very much. So, capital appreciation is usually from companies that do not pay dividends. Now, a dividend is a portion of the profits that a company will give back to the investors. And that's me and you, or you and I, however you want to put it. But if a company is profitable, they have two choices. One, put the money back into the company for capital growth so the stock rises in value. Or they can take the profits and give it back to you and me through a dividend. That is our portion of the profits just for owning the stock. Okay? Lending them the money, they pay us a portion of their profits. Christopher, don't have to answer, but wondering how you deal with the short-term capital gains with selling every week. Do you factor that in as expense at the end of the year? Okay, Christopher, this is very important, and probably a bunch of you other ones out here probably have the same question. He's talking about short-term capital gains. Well, here's the thing. When it comes to federal... When it comes to federal income taxes, my advice to people, and I do give this advice, you need to talk to a tax strategist or a tax planner to help you figure out how much taxes you actually want to voluntarily pay. Okay? If you want to voluntarily pay taxes on all of it, some of it, a portion of it, or none of it, that is between you and your tax strategist or tax planner. I can't give you advice on that one. Okay. So, that being said, Lindarella wants to take a look at the seasonality chart. We'll show you that in a second. Hold up. Let's finish going through this. So this is the last 90 days. So 90 days ago, last 3 months, we're at 19, jumps up to 21, drops all the way down to 1282. Well, up and then down. What's happening here? Well, we're looking for that new bottom. Once we find the new bottom, it will turn around and go back up again. Now, I did check, okay? Actually, we can check it right now. KSS. My son finally figured out how to do Yahoo Finance with black background and white lettering. So now we can see all the numbers. Do all your positions being 1 week contract? Okay, hold on a second. Hold on. Steve, do all your positions being 1 week contracted covered calls need to be written again, rolled into the next week, or let expire? Oh, Steve, that's an awesome question. Here's the answer. Are you ready? All right. I'm going to give you a quote by the great John F. Kennedy. I'm going to twist it just a tiny bit, but you'll get the gist for it. I cannot answer the question that's going to be in front of me at 3 o'clock Friday afternoon, an hour before the market closes, with the information that I possess today. So here's how it goes basically. Monday we buy the stock, we know what we paid for it. That is concrete. That is something that never changes. Whatever you bought it for, that's what you bought it for. Okay, until you dollar cost average down, the price never changes. If I sell a covered call against it, well, that strike price never changes. So you have two fixed items there, two fixed numbers. One is the entry price, what did you buy the stock for? And the other one is the strike price, what you sold. But what changes is the value of the stock, because the value of the stock, or the price of the stock, goes up and down, up and down, up and down. The option, well, the strike price doesn't change, but the amount that it's worth goes up and down, up and down. So I can't tell you what we're going to do on a Friday afternoon until all the information is laid out for me. And then they say, hey, the buck stops here. Now's where we make a decision. Great. What did I buy it for? What strike price did I sell? Where's the stock price now? Where's the value of the option now? What are my odds of being called out? What are my odds of being profitable? Do I roll it into next week? Do I let it expire, or do I let it get called away? These questions all get answered right around between 2:30 and 3:30 Friday afternoon, because I do all my trades almost the exact same every single day. Monday, 9 a.m., Tuesday, 9 a.m., Wednesday, Thursday, 9 a.m., Friday, 2:30. Why at 2:30? Well, nothing really I can do in the morning, and the market closes at 4. So I want to make sure all my positions on Friday are in a profitable situation. Hot to work on a stock market chain. I have no idea what that means, but okay. So each time I buy something and I sell a covered call against it, I don't know what's going to happen between Monday and Friday. So I check Tuesday, Wednesday, Thursday. Just take a quick glimpse. Okay, what did I buy it for? What did I sell it for? What am I going to do? Okay, mental note. Wonderful. Next day, same thing. Next day, same thing. Great. Friday's here. Great. What happened Monday, Tuesday, Wednesday, Thursday? All right, where does that put me now? That's when I have to come up with that answer. And I really can't give you that answer other than it depends. Greeting from Arizona. How are you doing today? Woohoo! All right. Let's go back to, Kohl's. Yes, right. We're going to look at the book value on Kohl's. Okay, check it out. The book value for Kohl's, that means if Kohl's liquidates everything, pens, papers, chairs, tables, shelving, everything. Okay, where can I find some passive stocks? George, sit back, relax, and just watch, okay? If Kohl's was given an order by the court to liquidate, pay off your investors. Well, you're buying the stock for under $10, and you're getting a $35 per share value on because the company's worth $35 per share. That's the value of the company. What's the stock price? Well, that goes up and down. That's the public's perception. Does it have any reality towards it? No. It's just what we think. Okay, we think it's only worth this much. But this is the actual book value. Okay, you cross the T's, dot the I's, everybody gets paid off. Well, that's how much each share is actually worth. But what's it selling for? That's a total different story. All right, so let's go back to here. All right. Oh, seasonality chart. You ready? Okay, last 30 days first, right there. Okay, so Lindarella, here's Kohl's right here. 30 days ago, 14, jumps up, drops down, looking for that 30-day bottom. Okay, what does it normally do? That's your question, the seasonality chart. Well, let's take a gander. There you go. Now, if you take a quick look, that's a nice upward run for the first quarter. I'm talking the first quarter. That's January to March. Okay, here's the middle of January, today, the 15th. A nice upward, consistent trend going to the upside all the way into April. Well, that looks good, but that's only historical performance. That's no guarantee it's going to do it the same thing this year. Well, it makes you want to think. If it's done it 10 years in a row, and this is the average movement over the last 10 years, what are the odds and probabilities that it's probably going to do the same thing? So that's a question you need to ask. Does it make sense? Just because it did it 10 years in a row, is it going to do it again? All right, too much right there. Here we go. Get rid of that. Get back to there. All right, so let's see what else we guys have. Swag, what's happening? Tim Lewis, Michael, Bobo, what's happening? B-Cat, Valverde, what's happening? Chicago Foodie, ooh, WEC. What is WEC? Let's find out. WEC. WEC Energy Group. Interesting. Unfortunately, it's going to be a no. And here's the reason why, Chicago. Here's the reason why it's going to be a no. January, February, April, July, August, December. These are all months, which means this is a monthly optionable stock. Now, monthly optionable stocks just don't work for me or for this trading strategy. Because a monthly optional stock, you can only trade it once per month. Now, once per month is only 12 times per year. So the question I would have for you, would you prefer, all things being equal, 12 checks once a month or 52 once every week? Okay, so in other words, do you want 12% doing a monthly, or do you want to put in a little bit more time and get 52%? Okay, so Chicago, I found that more people spend more time planning a weekend barbecue than they do on their personal finances. Okay, so if you have no interest in doing it, I can't help you out. Good morning to you too. Thank you. So ask yourself the question, does it make sense? If I do it monthly, I get one check a month. Okay, what does that come to? Well, 1% for each option trade, that's 12% a year. Okay, but on a weekly, 1% per option trade, that comes to 52%. Okay, to me, I didn't go to college. I admit it. I'm sorry. I have no alphabet soup after my name. It's just James Gaudino Sr. That's it. No doctorate, no bachelor's degree, none of this, none of that. Just a regular, average, everyday guy. That's it. Okay? Don't listen to a word I say. Do your own research. You don't believe me? Fine. Put WEC anywhere you want and see what kind of options are available on it. Monthly options only. The numbers just don't work for me. If you like it, more power to you. When's the best time to roll a covered call? Towards the end of the contract time period? Okay, Lucius, that's a great question. Now, unfortunately, I can't give you an answer that's going to make you say, oh, that makes sense. But what I can say, I look at my positions every day. So if I look at my positions, what never changes, like I said a little while ago, is what I bought the stock for. That never changes. Okay, the strike price I sold, that doesn't change. But what does change is the stock price and the option price. So if come Tuesday, I have an opportunity to roll forward and make another 1 or 2% for next week, well, yeah, I'll take advantage of it. But it always comes down to a numbers game. What did I buy it for? Where is it at now? What are the odds and probabilities of me being profitable? Okay? So it's a numbers game. Hello, Dave, to you. All right, so let's keep on going. Keep on keeping on. Okay, if you guys can do me a favor, all right? I am going to answer each and every question before the night's over. So if you have a question, please just ask it once and only once, because I will go through each and every one. It may take time to go through each and every one, but give me a minute or two. So Trey wants to look at QBTS. I can tell you no right now. I've never heard of it. QBTS. Yeah. Okay, now I'm finding this a little challenging. Okay, it was $1 a couple of months ago. So how can you tell me this thing has 20 years of increased dividends if it was just $1 a month ago? I have a CGI video to show you made by my team. I would really like to work with you. CGI is a category with VFX. My team can create high quality digital ads. Well, cool beans. Your best bet is sending me an email or a text. Okay, a text message. Now, you're on YouTube. On the channel that you're on, I know for a fact my phone number is there somewhere. Send me a text. Don't try calling because I have spam blocker. If I don't know who you are, your phone number doesn't get through. So leave me a message, send me a text. I would love to take a look at it. Then we can talk numbers. Does it make sense? That's my biggie. Does it make sense for me to work with you? That's the question. All right. So QBTS is going to be a no. WEC. Okay, Chicago Foodie. I asked the question once. You already seen that question. CRL60109. If you perform your trigger trade on Monday, by what day is your money returned to you to reinvest? Whoa, someone actually paying attention to that trade. Now, the interesting thing about a trigger trade is you can be in at 9:31 a.m. and you can be out 9:32 a.m. It all depends on how fast the stock moves. Because if you're jumping in at the opening of the day, the opening price is the opening price. It doesn't really matter what it is the opening price. Okay, the dividend or the amount you want to collect, usually the dividend, 51 cents, 83 cents, $1.15, that goes in after. And as the stock increases within that amount, you're automatically out. It could happen in the same day. It could happen the next day, the next day, the next day. Okay? Okay, I remember holding one for 101 days, I think it was. That's the longest I've ever had one doing that strategy. All right. But hopefully that answered your question. Joaquin, okay, you want me to take a look at Uber. Okay, Uber, I know for a fact, has not been around for 20 years. Okay, you cannot have 20 years, 2 decades of profits if the company is not 20 years old. Okay, so Uber is going to be no. Big Fish wants to take a look at Pfizer. I like Pfizer. Pfizer is on my list. Okay, but Pfizer is going to be a no. See, didn't take long. Okay, when I'm looking at the 1-year chart, let's go back to that 1-year chart, all the way back. Okay, now what do I see to make me automatically say no? Well, remember, I'm looking for 5 things. Number 1, the high. Number 2, the low. Okay? Number 3, where was it a year ago? Number 4, where is it now? Number 5, what's the direction? You take your little finger and you play childhood stuff. Oh, let's trace it out. Down, up, down, up, down, up, down, up, down. Okay, right here. You can see this right here. It looks like a whole 2 weeks of going down. So let's zoom into it really quick. Okay. Here's the high, going down. So it's going to be a no for this week, but it might be a yes for next week. What do I mean? Well, number 1, do I like the company? Well, yes, I do. Number 2, it's a no now because, look, it's in a downturn. It's heading down looking for a new bottom. Okay, so if you don't know what that means, let me quickly show it to you. I don't know if I can open this up anymore. Yeah, there we go, right here. Now, watch closely. Down, bottom, up, top, down, bottom, up. top, down, bottom, up, top. That's all it does. Up, down, up, down, up, down, up, down. That's all it does. If you like a good company, you follow it. Watch it day by day. Once it makes the bottom, let's zoom into that. Okay? Once it makes a bottom, it will turn around and go back up. Okay? Once it makes a top, it will turn around and go back down. That's basically all they do. They go up, they go down. They go up, they go down. So follow it. If you like a company, follow it. Watch it. Okay? Here, where it's falling right here, here's the bottom right there. Here's 1 day to the upside. I like 2 days to the upside. So let's go just 1 day. Okay? Here you go. 2 days to the upside. That's where I want to jump in. Okay? You can't argue with it. Okay? Top, bottom. 1, 2 days to the upside. All right? Next one. Okay? That's where I would jump in right there. 27.80. Now at 27.80, I want 1%. That's 27 cents. Okay? So what happens the next day? Well, there you go. I'm out already because I'm only looking for 1%. That's all I'm looking for. Using a safe, predictable, consistent trading strategy called the covered call. Buy the stock, sell somebody the rights to buy it from the same price I just paid for it. Okay, Hugo, thoughts on Blade Air Mobility? Now, I'm kind of curious. I've never heard of this company. Okay. BLDE. Sir, can you do NTPC analysis? Okay, hold on a second. I'm going to do that. Let me talk to Mr. Hugo. Hugo, you're new here, because I'm good with names. I would remember that name. Here's the thing. When I say I want certain requirements in all the stocks that I buy, one is 20 years of consistency in the profitability. Okay, that's number one. Number two, weekly options. That's it. Three criteria. Under $250, weekly options, and consistently profitable. That's it. Okay, this one has monthly options. This is a no. Nothing more than a waste of our time and everybody else's time. Okay, so Radhika, I don't know if I said that right. Radhika wants to take a look at NTPC. NTPC. Never heard of it. We cannot find this symbol. So it's either not a stock symbol for the U.S. market or it's just not a stock. Next. Oh, Miguel. Miguel wants to take a look at puts on Wells Fargo. But, sir, options are very risky. No, options are only risky if you don't know what you're doing. Save man, woman, peace. Okay, now I'm going to tell you again. Options are only risky if you don't know what you're doing. I always tell people, if you don't understand it, don't do it. Okay, options are not risky at all if you understand what they are and how to use them. All right. I traded futures and options for 25 years, and it takes a long time to learn. I'm terribly sorry there, dude. I taught my 9-year-old daughter in 15 minutes. I'm actually going to show you. Okay, hold on. Go to my YouTube. Here we go. YouTube. Tra-la-la. All right. Videos. The oldest.
Hi, I'm Tracy, and as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you.
Over 20 days in the month of January. So 20 days in February. There's over 21 days.
That's me. Long time ago.
That means every single day you can buy a different stock. Because every single day there's a different company paying out dividends. Yay!
my favorite part. It makes me laugh every time I see it. Every time I see it, I laugh. I think it's funny. I had to keep a 9-year-old entertained. How do you do that? If you could teach options in 50 minutes, I assure you, you would not have 21 people. You would have 21 million. Well, I hate to be the bearer of bad news, sir. But however, do you see the date on this? The date says 12 years ago. So I've been teaching this thing for over 15 years. Okay, so options aren't that difficult. Let me give you a quick scenario. Let's say hypothetically you buy IBM at $100. Okay, I'll give you a better option. Let's actually do one. Okay, we'll actually do a trade. U.S. Steel. How's that? U.S. Steel. Okay, so I'm going to give you a quick example for U.S. Steel, and you explain to me if you think this is right or not. Okay. Now. Okay, you ready? U.S. Steel, this is the last 60 days. Okay, 60 days ago, U.S. Steel is at $43. Okay, she drops, retraces, drops again, back up. Here we are right now at $36.50. Okay, $36.50 for U.S. Steel. Now, hypothetically speaking, if tomorrow morning I decide to buy U.S. Steel at the current price, $36.92, okay? $36.92. That's the current price right there. $36.92, current price. Now, the strike price, which is giving somebody the right to buy it from me at a certain price by a certain date. When I say weekly options, that means they expire every Friday. So, for instance, 17 January 25. That's this Friday. 24 January 25. That's next Friday. That's 2 Fridays away. 31 January. That's 3 Fridays away. 7 February. 4 Fridays away. 14 February. 5 Fridays away. So on and so forth. Every Friday there's an option expiring. It is called a weekly option. So if I buy U.S. Steel $36.92 tomorrow morning, I can sell somebody the rights, not the obligations. That means they can do it if they want. They don't have to if they don't want to. They can buy it from me at $37. That's the closest one. And pick up, what is that? 72 cents a share. Now, let's go through the exercise to see exactly what it sounds like and what it would look like as a covered call. You ready? Let's get rid of this. Let's change this to covered stock. Now, like I said, I wanted to do the 37. Okay, the 37 is right there. I want to hit buy right there. Now, I'm going to change it to do just one contract. That way the big numbers won't scare you away. Just one contract. I have it set up to preload 10, but I'm just set up for one. One contract. You ready? I change this. One. And then I'm going to change it from a limit order to a market order. Now, the reason why I'm changing it from a limit order to a market order, because a market order will go directly to the market maker's computer. So first thing in the morning, it will get filled at 9:30 a.m. That means I will buy the stock and I will sell the option at the exact same time. Well, usually 2 or 3 seconds apart. That being said, let's take a look at the numbers. Well, here's what it should sound like. Buy one covered call of X, U.S. Steel. 24 January 25. Well, that's next Friday. Okay? The 37 call strike over X, which is the stock symbol, at the market to open. That's the order. That's the way it sounds. All right. So, let's go through the numbers. Now, the first number you're going to see is the break even. Well, the break even is 35.39. That means anything over 35.39 is going to be a profit. Okay? However, if I'm buying it at 36.92 and it is in an uptrend at the moment, well, odds and probabilities are telling me that if I'm right, well, I'm going to make this profit. Okay? Remember, 30-day high, 30-day bottom, stocks go back up again. Well, that's where we are. The stock is starting to go back up. Is it guaranteed? No. The only thing that's guaranteed is life is death, taxes, and disappointment. Get used to it. So that's my break even. All right. So what's my maximum profit? Now, remember when I said I wanted a simple, safe, predictable trading strategy? Well, I know exactly what I'm making on this trade before I even do it. I'm not buying the stock and waiting to see if it goes up or down. No. I'm buying and selling at the exact same time, so I know exactly how much I'm making off of this trade. What does the stock have to do? Well, the stock only has to, basically stay where it is or go up a little bit. Okay? Now, the profit here, so it says here, maximum profit, $160.50. Well, let's break out the calculator. Okay, take our profit, $160.50. Now, how do you figure out your rate of return? You take your profit, $160, and you divide it by the cost of the trade, including commissions and fees. Well, that's $3,540. Okay, divided by 3,540. And that will equal 4.5%. Yeah, you heard me right, 4.5% for 1 week. Well, it's actually 10 days because, there's only 3 days left this week, and you get the full 5 days next week. Okay? So 4.5% for this trade, and that's for 1 week. So if 1% a week is 52% per year, simple interest, I think it's 67% per year compounded. But let's go for simple interest so, people don't get confused. So 2% would be over 100%. That's doubling your money every year. But 4%, 4.5%, well, that's over 200% per year. Okay? The numbers are there. But the big question is, number one, does it make sense? Number two, do I like U.S. Steel? Number three, do I like U.S. Steel at this price? Am I willing to hold on to it for the rest of my life, collect increasing dividends every 90 days, every year, but get the dividend every 90 days, and collect a premium doing a covered call every single week after week after week. Okay? Does it make sense? Okay, I buy the stock, sell somebody the rights to buy it for me for the exact same price I just paid for it, collect 1 or 2% on a weekly basis. That's over 50% per year. It's a simple, safe, predictable, consistent strategy created for a 9-year-old little girl back in 2008. All right? So, save man, women, peace. I don't know if that makes sense to you, but, that's what it is. What questions do we have? Hey, Orlando, what's happening? Let's take a look at... Bobby has something to say. Robbie Blake, the stock rises and the line increases, drops, but the stock stays, then the profit is low, but the high because it stops and rises, but 1% only then. No, don't drop. It rises until it lowers again and then say, okay, Robbie, dude, I don't know if that's a statement. It's sure not a question. I don't know. It's not a question. But anyway, Orlando wants to take a look at Intel. So I'm hoping that makes sense. Okay. Now, in my humble opinion, options are not complicated. Options are not risky. But that's for me because I do them over and over and over and over again. Now, if I wanted to do brain surgery, well, that's kind of risky. So you don't do something you don't understand. So I ain't going to do brain surgery. Am I going to do options? Yeah, because I understand them. I look at them twice a day. Once in the morning with my private morning trading group and once a night with you guys. So I know where my positions are every day. And I'm okay with options because I'm looking at it every day. Now, I'm not spending hours. I'm spending 10 or 15 minutes. That's it. And if you don't have 10 or 15 minutes for your own personal finances, I can't help. Nobody can help you out. I got to figure out a way of talking less. All right. Well, let's get out of there. I get to close all these out and go back to the beginning where we are right here. Here we go. All right. Orlando wants to take a look at Intel, INTC. Now, just to let you know, I do have some Intel. I also do have some US Steel, INTC. Okay. Here's Intel. High, a low, where was it, where is it? What's the movement? Down, sideways, now at 1972. Okay. If I'm going to buy it, I'm buying it at 1977. So the 1950s or the 20s are going to be the closest. Well, the 20s are giving me 2%. The 1950s, well, that's giving me more than 2%. Well, that one sounds better if I like Intel. Now, I already own Intel, so I'm okay with buying some more. But here's the numbers. A year ago was the high, 50.23. Okay, last 90 days, the last 3 months, here's what we're looking at. The high, 26.50. The bottom, 18.75. Look at the movement. Up, down, sideways, down, and then up again. I like the movement we have right here. 2 days to the upside from the bottom of the year. You'll make most of your money buying low, selling high. Now, you can't get any lower than the low of the year. And that was 2 days ago. So let's take a closer look at the 30-day chart. All right, 30 days ago, here we are. I got to fix that so you can see it. Okay. 30 days ago, we're way up here. 30-day bottom, right here. 30-day high, 30-day bottom. What usually happens at a 30-day bottom? Usually the stock goes up. Well, we have 2 days to the upside. Okay, Monday is the 30-day bottom. Tuesday's higher, Wednesday's higher. That's 2 days to the upside. So tomorrow looks like a nice opportunity for me to jump in. Well, because what do the numbers look like? Well, if the high is 30 days ago, the low is 3 days ago, 2 days to the upside, if tomorrow she opens higher, yeah, I would be jumping in. That's me. Because I like the bottom, I like Intel, I like the numbers. It all makes sense to me. All right? So if we do Intel at 1950, well, let's take a look at it. The 1950, there it is right there. And we do one contract at the market to open. Here it is. Okay. Buy one covered call Intel 100. That's the weeklies. 24 January 25. That's next Friday. The 19.5 call option against the Intel stock at the market to open. Here's my break even. Here's my profit. Here's what it's going to cost. Well, let's figure it out. Well, if the profit is $44 and the cost of the trade is $1,906, that comes to roughly 2.3%. Now, 2.3% on Intel. Well, you get that question. Do I like Intel? Do I like it at this current price? Am I willing to buy it and hold on to it? Do they consistently increase their dividends? What do they do? These are questions you should know right off the top of your head. Why would you invest in something you have no clue over? It just doesn't make sense. So let's keep going. If I'm making 2.3% on a weekly basis with Intel, okay, that's over 100. That's doubling your money every year. 2% a week. That's over 100% a year. Well, that makes sense to me. Let's go to our next one. All right, let's get some of these questions out of the way. Holy cow, we got 99 questions. Uh-oh. Miguel wants to look at Wells Fargo. Let's do Wells Fargo real quick. WFC. No. That was quick, wasn't it? Did you hear that, Miguel? No. Now, you want to do puts on WFC? Great. I'm not going to explain to you how puts work, but if I was going to do it, it would be a no. Okay, 60 days ago at 78, drops here, shoots back up. Look at this gap. That has profit ticket written all over it. You're welcome there, Orlando. So the last 30 days. Okay, 30 days ago, right here. Look at where it is now. Yep, big gap up like that. There's definitely going to be profit taken there. Okay, Chap Stevens, VMC. What the heck is VMC, Chap? Thank you, much appreciated. Thanks, Duncan Quantum. Hey, it's D-Dub. What's happening, dude? Okay, Brian Walker. Quantum, you actually got to tell me what the ticker symbol is because I don't even know who Quantum is. It's not like IBM or Goodyear. Lockheed. Lockheed is LMNT. LMNT. Lockheed Martin. Okay, so here's Lockheed Martin. The high, the low, where was it? Where is it? Look at the movement. Up, down, and it's bouncing right there. So that could be a good clue right there. The 486, the 485s are going from 490 to 8. Yeah, you make your 1% there. Okay. I'll take the 52%. Vincent, what's happening? Hello. How do you relate the numbers? I'm not quite sure what you mean by that. How do I relate the numbers? It's just a numbers game. 1 plus 1 is 2. 2 plus 2 is 4. 4 and 4 is 8. If I'm buying it at $100, selling it for $1, and then I get it's 1%. That's what I'm looking for, just 1%. Let's keep going. All right. Year ago, we're at 463. We bottomed out at 413. Top 618. And look at the big drop. From 618 all the way down to 460. That's almost $200 decrease. Yeah, that would make me quiver. So, last 30 days. Okay. Here's your last 30 days. 30 days ago, 495. She drops to 460, shoots back up. Right now, we're at 483. Okay? To me, it is closer to the high than it is to the low. So it looks like there should be profit taking. So from here to here, that's 460 to 487. That's $25. Well, $25 on a $400 stock. That's only like 5% increase. I mean, all right. Sunni, how do you relate numbers and identify the trend or the pattern? Oh my goodness, I can't believe you just asked that question. Okay, so the question was, how do I relate the numbers? Well, simple. A year ago, 440. Dropped down to 420. From 420 to the high of the year, that's 620. That's a $200 increase. A $200 increase on a $420 stock, that's about 45%. From here to here, that's about a 45% increase within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. 45% increase in 10 months. Okay, so from the high, 620, down to 460, that's a $200 drop. A $200 drop off of a $600 stock. Well, that's 30%. Can you explain one of your call options in detail? I put in X, I can make X, and I can lose X. Oh, Sean, we just did that. When I find another one, Sean, I'll explain it to you. We just did US Steel, which just so happens to be X. All right, Hugo, we already looked at BLDE. Okay, Vincente, you like 52%, cool. Okay, Sonny wants to take a look at Disney. Disney, D-I-S. Okay, well, here's Disney. First thing we want to look at is the chart. High, low, where was it, where is it, what's the momentum? Up, down, up, down. Great. What's the numbers look like? Is it going to be worth our time? Before I even look deeper into the chart, is it the right amount of money that I'm going to be getting? 108.50, the 109s are going for 98 to 108. That's not 1%. That's a no. Simple. The numbers don't work. It's going to be no. West Virginia. There's always someone in the crowd asking me, May, how are you today? May, I would invite you, but I have no idea who you are. Okay, sorry. Okay, so Disney's going to be a no. Okay, XYLD. XYLD. Well, do you see that, West? January, February, May, August, those are months. Okay, monthlies don't work. It's a no. And Moogly, terribly sorry, I don't know the Baby Shark song. I've heard it, I just don't know it. Okay, Brian, DJT, not 20 years old, sorry. Logan, Sangamo Therapeutics, you actually got to give me the ticker symbol, but just to give you a tidbit of information, I know absolutely nothing about that company, so I don't think it's been around for 20 consecutive years and increasing their dividends consistently. Okay, Randy J, what about cattle feeders? Those are futures, dude. Yeah, I don't do futures. I do one thing and one thing only here. Now, I know a lot of shit. Okay, I do know what to look for when I'm looking at futures. Okay, I always look at the commitment of traders report when I do futures. I don't do them anymore. They have a little bit more effort than the reward. That's just me. Okay, Sandra, we already looked at coals. Mile Cutter. So would it be good? Oh, would it be, okay. I'm assuming you mean, would it be good to short Pfizer short term? I have no idea. What is Pfizer doing? PFE. I'm not sure if I would do that or not. Okay? I don't short stocks. To me, it doesn't make sense. I like to stay on the positive side. Don't. Nanya, what do I think about RGTI? The same thing I thought about it 4 days ago when we looked at it while you were here. RGTI is a no. RGTI. Okay? You know what the hell you're thinking with this thing. Okay? A couple of months ago it was at $1. Then it jumped up to 22. Yeah, you get those, what, once every decade? Executive, Exit Realty Cafe. Cool. You have to send me a DM, dude. Or dudette. Can't really tell. He's doing it for free now. Way to go, KG. Okay, Papaloos. Macy's and Kohl's out for now because of dropping like a rock. Correct? No, I actually have some Macy's and I have some Kohl's. Okay, so Papaloos. I've been doing this long enough to get a good idea of where they're going. So let's take a quick look. Macy's. Okay, so here's Macy's. Take a gander at it. Now, last year, Macy's was one of my big winners. Made most of my money. Look at the stock. Look at it. Last year, it was at 18, jumps up to 22, drops down to 19, goes sideways for a couple months, drops down again, and goes sideways for the next 8 or 9 months. That's all. How can I possibly say that's one of my biggest winners last year? Because I trade on a weekly basis. in on Monday, out on Friday, 1 or 2% every single week with Macy's. If you take a look at my historical performance or my historical trading, okay, here's all my trades for last year. Okay, here's them all right here. Click on any one. Okay, what do we have? Harley Davidson, Advanced Auto Parts, Mara, and Macy's right there. Riot, Intel, Riot, Macy's, Mara, Advanced Auto Parts, Harley Davidson. What did I make that week? That week I made 1.7%, $3,600. All my trades are listed right there. You want to know what stocks I like? Right there. It looks cool. It looks all red. Okay, so Sean, let me explain to you what all red means, okay? So a lot of people say, but it's all red, isn't that bad? No, it's not. Okay, let's go here. Okay? You see the red? You see the green? Green means I bought something. Red means I sold something. That's all it means. It doesn't mean I made a profit and I lost. It doesn't mean that at all. Green means I bought something. Red means I sold something. That's all that means. It's not good or bad. It's just what it was. What color would you like me to? If I buy something, what color would you like it to be? If I sell something, what color would you like it to be? Because I can change the colors. I can. That's part of the wonderful things of Thinkorswim. I can change it to purple and yellow. Okay? But red and green, I've been doing it for 20 years, so this is what I've been looking at for 20 years. Okay? I bought Walgreens, 3,000 shares at $9.53, sold the $9.50 stock option, and I picked up 25 cents a share. Well, 25 cents a share on a $9 stock, well, that's over 2%. That makes sense to me. Macy's. Oh, not there. Macy's was here. Macy's, the $14.50. Okay, so I did a roll on Macy's. It's where I bought one, sold the other, and just rolled it forward. I only collected 11 cents per share, which is not 1%. Okay? Do I make 1% every single trade? No. Some trades I make 4%. Some trades I make less than 1%. But it averages out to 1% or more every single week. Okay, so KK. James, is your Thinkorswim the front end to the brokerage firm like Schwab or Fidelity? Yeah, Thinkorswim is the front end of Charles Schwab. Okay? It is owned by Charles Schwab. So yeah, I had to open up an account with Charles Schwab. Now, I didn't have to do anything because Charles Schwab bought TD Ameritrade. Now, I used TD Ameritrade for about a decade. Okay, first I used Thinkorswim. That got bought out by TD Ameritrade, and TD Ameritrade got bought out by Charles Schwab. But I got to use the same trading platform for the past 20 years. And I think that's awesome. Next question. Okay, Nanya, RGTI. RGTI. Yeah, we already talked about this one. No. Papalaus. Macy's. We just did Macy's, didn't we? Okay. Oh. Yeah, I was talking about Macy's or Kohl's out for now. No. I actually own Macy's, and I do actually own Kohl's. Here's the thing. Okay, so here's what Macy's is doing. All right. Here's where it is right now. Okay, 30-day high, 30-day bottom. Where do you think it's going next? That's it. Where do you think it's going next? And do you like it? Do you like Macy's? Are you willing to hold on to it? So if you bought Macy's here, which me, I wouldn't do. I would wait until it finds the bottom and turns around. Sean, all much to do. Wait a minute. All much do you have altogether? Oh, how much do I have altogether? I have no idea. I don't keep track of that. Isn't that weird? Yeah, I get it, Sean. How much do I have altogether? Well, I have 7 accounts now. How much do I have altogether? Don't really know. It's not really a concern of mine. As long as I'm bringing in enough every week safely and not losing, I don't really care about the amount. I know it's weird. I know people don't understand it. So Kohl's. Now, Papa Lowe's, we already took a look at Kohl's. Same thing. Okay, now I do have some Kohl's, but here it is here. It's trying to find a new bottom, just like Macy's. But once it finds the bottom, it will most likely turn around and go back up again, because that's all they do. Okay, now I do have positions in both. Place your bet. Hey, V. Okay, bought M at 14.39. Okay, user 112-6647454194119. Sorry. You bought Macy's. Now what? Well, I'm not 100% sure what you mean by now what. Number one, do you like the company? Number two, if you bought it at 14.39, did you or did you not sell a call option against it? Now at the 14.39, more than likely you'd be looking at the 14.50s. Well, at this moment in time, the 14.50 is only going for 8, which is about a little over 0.5%. Now, over 0.5% every single week is still over 26% for the year. Okay, 26% is not that bad. Okay, how often did you get 26% consistently year after year? Probably not often. So it always comes down to what makes sense. If you really want my opinion, okay, I have to see the whole picture, because I have no idea what it is you're looking to do. Okay, you bought Macy's at 14.39. Now what? I don't know exactly what it is you're looking for. So if I knew what you were looking for, maybe I'd be able to give you a better answer. All right. Tim, are you a 7 or 66 registered? You know, I know exactly what you mean. And I never said I was a registered anything. The only license I possess is a license to drive a car and to drive my significant other crazy. That's it. Okay, so if you're looking for someone who has a Series 7 or Series 66, you're in the wrong place. I'm not suggesting anything to anybody. I'm just showing what I am doing. What you plan on doing with the information I am sharing. It's information only, entertainment. I dance and I sing. La, la, la. Okay, so no, this is not a financial advice whatsoever, any way, shape, or form. I'm just giving you my opinion when people ask me about certain things, like UNRG. Never heard of it. XYLD. Hell no. How's that? XYLD. Hell no. Don't let your meatloaf. Because 2 out of 3 ain't bad. Yep, I like it. All right, so UNRG. What the hell is UNRG? It's a no. That's what it is. No. XYLD. We already said no to that. If you really want me to take West Virginia, you really want me to take a look at that, you actually give me a little bit more information. Sorry, I'm going through all the questions. Okay, so West Virginia. I'm gonna make a deal with you. Okay? You go into a financial website, find out how often XYLD has increased its dividends, and come back to me, let me know consistently from the time they started paying dividends until today. How many dividends had they paid before the dividend dropped? Okay, so if it's like 12, 13, 14, 12, 15, say, yeah, that's a drop. Anytime it drops, that's when you have to start over again. How many consistently have they increased? You tell me that, and I will gladly bring up XYLD. All right, Michael, with the 10-year Treasury note tanking today, along with the stock short squeeze, did all your covered calls get called today? Not a one. Sorry, nothing of mine got called. I didn't get any margin calls. I didn't get any phone calls. I got nothing. Nothing changed anywhere for me today. All right. Meatloaf. Penny stocks, no. Barbecue Smoky Society. Yeah, no to penny stocks. Lots of skeptics and discouragers. Well, cool stuff, Jake. You know what they say. If you don't have enough trolls, you're not doing your work properly. They all just say to me, okay. QUBT. Midnight. Are you serious? QUBT. Never heard of it. Quantum. Yeah, no, dude. Seriously? You're at $1 a couple of weeks ago, shoots up to 28, and now you're wondering why it's back at 11? Yeah, no. So, can't wait till Sunday for your... yeah. I don't talk about those things, Paul. It reminds me I'm getting older. Yeah, it doesn't thrill me. Hog was up today, and Intel. Andrea, well, let's take a look. HOG. Ooh, holy cow, she did jump up today, didn't she? Okay, Harley Davidson, HOG. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Okay, up, down, up, down, up, down. All right. Now, she's bouncing off of this right here, so that's where I want to take a quick look. Now, I jumped into Harley Davidson a couple of months ago, and I still have it. Well, I have no problem holding on to Harley Davidson. It gives me a return every single week. Now, it doesn't give me 1% every single week, but it does give me a return every single week. All right. A year ago, $33.92. We topped out at 44. That was back in the end of March. Last 90 days. 90 days ago, we're at 32. Jumps up to 35. Drops all the way down to 27. 2 days to the upside. Yesterday and today. Sean, how do you guarantee you don't lose on the call options? Okay, Sean, the only guarantees in life... only guarantees in life is death, taxes, and disappointment. Sorry, get used to it. Okay, so how do I do it? Well, I watch every single day, twice a day. Okay, once in the morning with my private trading group. Okay, if you're interested, the link is in the bio. And then tonight, or at nights with you guys. Okay, every night, Sunday, Monday, Tuesday, Wednesday, Thursday. Okay, I'm not doing Friday nights anymore. I'm not doing Saturday nights anymore. Because the numbers that end up on Friday aren't going to be any different on Saturday and aren't going to be any different on Sunday. Okay, so it's Sunday, Monday, Tuesday, Wednesday, Thursday. No more Friday nights, no more Saturday nights. And it's always a numbers game. What am I buying it for? What am I selling it for? What am I making? Let's finish up with Harley Davidson. The last 30 days for Harley Davidson, this is what it looks like. Now, when you get to the 30-day chart, look at it. High, low, where was it? Where is it? Where's the momentum? Down, up. Well, look at how much distance you got from the high of the 30-day period to where it is today as compared to the bottom. 30 days ago, the high. 3 days ago was the bottom. Now it's going up. You can argue all you want, but facts don't lie. Here's the high. Here's the low. 2 days to the upside. Great. What do the numbers look like? Well, here we go. Currently $29.90. The 30 is going to be the closest. So if I bought it at $29.90, sold somebody the rights through a covered call to buy it from me at 30, well, I'm going to collect 30 cents a share. Now, 30 cents a share on a $30 stock, that's 1%. That makes sense. The company's been in business for over 100 years. It's an American icon. Everybody knows what a Harley is. Okay? So the question would be, do you like Harley? And do you like Harley at this price? Are you willing to buy it at $29.90 and hold on to it for the rest of your life and gain a 1% every week or until it hits your target and the dividends consistently increase? It's a question that you really need to ask yourself. If you don't like Harley, why not? They're over 100 years old, not going anywhere. Intel. Now, I think we already looked at Intel today, Andrea. Yeah, we did. So Intel and Harley are on the list. Okay? 30-day high, 30-day bottom. Now it's going to the upside. So if I can buy Intel tomorrow morning at 1975, I can sell it for 1950, get more than 1%, or I can sell it at 20 and get more than 2%. Okay, either one of those is going to give me over 2%, and the 1950 is a safer trade. Sean, let me phrase it this way. What did you say to your daughter about options when she was 11 to make it so she couldn't lose on them? All right, you ready, Sean? Here we go. I'll give you the 5 rules. Simple. Number 1, never buy something you don't understand. If you don't know what the profits look like, if you don't know what the dividends look like, if you don't know what the consistency of the increase of dividends look like, if you don't know the book value, if you don't know the high and low of the year and the range for the whole year, if you don't understand it and don't know vital information about a stock, don't buy it. It's really not that difficult. All the information is right at your fingertips. If you don't like the company, don't buy it. That's number 1. Number 2, if you buy it for $20, never, ever, ever, ever sell it for less than $20. That's it. If you sell a covered call at $20 and you get the $20 back, well, that's as long as you never sell. Rule number 2, never sell at a loss. Rule 3, consistently profitable. Rule 4, weekly options. Rule 5, make sure the numbers work. What am I buying it for? What strike price am I selling? What am I collecting? Is it more than 1%? Great. Is it the right time? Well, it's the right time for this one. Look at this. There's the bottom. She's going up. Well, hell yeah. User 5955718428627 wants to take a look at Verizon. VZ. Verizon. Okay, so here's Verizon. Interesting. First glance, look at that right there. Here's a new bottom right there. New bottom of the year. Well, this is the 1-year chart. High, low, was, is. Look at the movement. Up, down, up, down. It's a lot of up and down, okay? But that's the big version. That's where it was. This is where it is. Here's the movement. Up and down. Here's where we are. Great. What am I making on this? Is it worth my time? Well, 38.30. The closest one's going to be the 38, and it's paying 84. Okay. Well, that's well over 1.5%. It's 84 cents a share. Doesn't sound like a lot, but hold on. If I'm buying it for 38.30, I'm selling it for less than I paid for it, 38. But I'm walking away with an 84 cent profit. Okay? Add it together. Think of it this way. I'm buying it for 38.30 and I'm selling it for 38.84. I'm still making a 50-cent profit. 50-cent profit on a $30 stock is over 1.5%. So the question comes, do I like Verizon? Well, look at the chart. High, low, where was it? Where is it? What's the direction? Okay, it's a big drop here. Turning around, go back. Now, it looks like a big drop, but it's only going from 45 to 37. So 45 to 37, that's only an $8 drop. Okay, it's a little over, right around 15%. Not that much, but still, 15% is enough to get people like me interested in saying, wait a second, I can make a profit off of this. Last 30 days, here's what it looks like. 30-day high, 30-day bottom, 3 days to the upside. Okay, there's the bottom right there. Monday was higher, Tuesday was higher, Wednesday was higher. So is it possible that Thursday might be higher and Friday might be higher? Because it's a trend until it stops. It goes in one direction until it's done. Once it's done moving in that direction, it turns and goes the other way. Well, right now, here's the bottom, and she's going up. It makes sense. So I got to write that one down. Oh, then. Let's take a look at the next one. Thoughts on Microvision, MVIS. Spencer, never heard of it. And if I've never heard of it, MVIS. MVIS. $1.28. Seriously, dude, Spencer, how can you possibly get me to a... Okay, never mind. You know what? It might. So let's go directly to Yahoo Finance and put it into, what do you call it? What are we looking at? MVIS. MVIS. Into the, what do you call it? That's not what I want to see. All right, it's got a book value of 31 cents. Okay, book value 31 cents. Well, let's take a look at how the dividends look, because that's a concern of mine. Are they consistently profitable? The easiest way is going straight to the dividends. Do they increase every single year? Okay, historical prices, dividends only. Oh, there are no dividends. Right there, see it? There are no dividends in the selected time period. So that's no. Why would you suggest a dividend stock that's not a dividend stock? Okay, 5280 wants to take a look at CTAS. CTAS? What the heck is CTAS? I've heard of it, CTAS. Cintas Corporation. Maximum dividends. All right, that doesn't make me happy. Okay, so who asked for CTAS? All righty. What's his name? I have no battery juice over here. XRP, Hicks Doherty. Yeah, XRP is not a dividend stock, dude. No. No, no, and hell no. XRP, no. All right, so CTAS. Let's take a look at the dividends. Are you ready? 003, 2331. That's backwards. 51, backwards again. 283, backwards. 3, 4, 19, 22, 6, backwards. 7, 7, 32, 9, backwards. 10, 46, 47, 48, 12, backwards. 14, 64, 77, 43, backwards. 26, backwards. What the hell are you thinking? Seriously? CTAS does not increase their dividends. No. Mile Cutter, it is an uptrend. I wouldn't short Pfizer. Thanks, Eddie. Why do I feel like this is a different language? I'm so fascinated but lost. Well, good evening to you. I would say your name, but I can't read that. Sorry. Hick Doherty, just joined, didn't know the topic. Higher about Pelflet. I have no idea what that means. Okay, Hicks Doherty. Daughtry. All right. Jacob, just keep listening, you'll learn. Thanks, Jacob. James Jeter, LNG. Why does that sound familiar? LNG. Doesn't sound familiar. It's going to be a no. People need ChatGPT to do research. Okay. No. Okay. Monthly. No. Okay. Sorry, James. Monthlies just don't work. Papaloos. So hold for now. Papaloos, not quite sure. Jacob, thank you so kindly for the encouragement. I'm hoping to learn something soon. Ooh, that hurts. That means I'm not teaching properly. Cool stuff by Jake. My comment got filtered, I believe. If this is a dupe, ignore. Okay, not quite. Hey, basically, anytime you explain what you're teaching, people told me just do index funds. Oh, hell no. You tell me one index fund that got over 25% per year for 15 consecutive years. Say to these people, I have no idea. Okay. Hicks, Pennapark floating rate, PFLT, look it up. Yeah, no. So you're buying stock at the market price, sell a covered call on the stock. Absolutely, because it makes sense to me. Okay, 5280, we looked at C-test. It's a no. Hey, James, I know, keep asking, but your thoughts on KBRL and EOG? Well, EOG was actually on our list, I think, this week. But let's take a look. KBRL. KBRL. That right? Sorry, CBRL. CBRL. Cracker Barrel. No. Cam-Ann. Got it? Monthly. Sorry, dude. Monthlies just don't work. Okay? EOG. EOG. Now, EOG is on my list. Unfortunately, look at where it is. That thing skyrocketed from 118 to 138. That's a $20 move. That is basically a hell no this week. Okay? Your 30-day bottoms 30 days ago. 30-day high was today. Where do you think it's going to go next? Profit take is going to take shape somewhere. Second day watching. Can-Am, thank you for that. Okay, James Jetter. Riven, no. See, I know for a fact Riven's not 20 years old, so that's going to be a no. CRSR. James, I never heard of it. CRSR. Oh, that's a no. Okay? Monthly. Now, James, when I say never buy something you don't understand. So, my thought here, two. One, you're not listening. Okay? Monthlies don't work. Don't ask me to take a look at them because they just don't work. Okay? Two, never buy something you don't understand. So, why are you buying something you don't understand? That's my question. When I say never buy something you don't understand, which means you should know whether or not it has options. You should know if it pays dividends. Hicks Daughtry, SPG, Simone Property Group, SPG, never heard of it. It's like spaghetti, SPG. So Hicks, I'm going to tell you the exact same thing I'm telling James right now, okay? If you're asking me to look at a stock and you know or you don't know if it has weekly or monthly options, why are you looking at it? If you don't understand something, don't buy it. If you know, because I'm telling you, I don't do monthlies because they don't work, why are you asking me to take a look at one? Okay? If it doesn't have dividends, you should know if you are going to consider putting your money into a company such as this. I'm not saying if it's good, I'm not saying if it's bad. But if you're considering putting your money into a company, you should at least have some basic information. Basic information would be, well, how profitable are they? Are they consistently profitable? What are their earnings per share rates? How consistently have they increased their profitability? Do they have options available? And are they weekly or are they monthly? Okay, Takao 444 ExxonMobil, XOM. I like ExxonMobil. Okay, ExxonMobil actually fits. High, a low, where was it, where is it? Look at the movement. Up, down, up, down, up, down, up. You can see that. The one-year chart can show plainly. Here's the high right here. Here's the bottom right there. Now it's going back up again. Okay, great. We'll take a closer look. But before I take a closer look, is it going to be worth our time and effort? Ediberto Duarte. ¿Qué pasa, amigo? ¿Cómo está? I'm assuming that's a Hispanic name. Hold tight. We're going to take a look at Coca-Cola in a minute. Okay, don't go anywhere. So, ExxonMobil, does it make sense for this week? Well, currently it's at 111.71. The 112s are going to be the closest strike price. Well, the 112 is going for $1.13. Well, that's over 1%. So, yeah, the number works. But is it the right time to buy? So let's take a look. Now, the 1-year chart will give you a rough idea of where it stands overall. It will allow you to quickly decide whether or not it's a yes or a no. Well, where's the high? Way up here in the 126 area. Where's the low? Well, it's way down here, the 96 area. Well, look where it is right now. It's at 111. It's between the low and between the high. Okay, fine. Let's zoom in a little closer. The last 90 days. Here's the last 90 days. Same thing. Here's the high. Here's the low. Here's where it was. Here's where it is. Where's the movement? Down, up, down, up. Simple, right to the point. You don't need to get really specific yet until you're ready to make a decision. But simple, quick answers, well, 90 days, last 3 months. Here's where it was at 120. It drops down to 115, shoots up to 123, drops all the way down to 105, and shoots back up to 111. It's in an upward trend at this moment. Okay, there's an old phrase, never fight the trend. If the river's going downstream, don't try to go the opposite direction. It just doesn't make sense. Homeboy, what's happening? Can you explain or definition of a dividend? Homeboy, yes, I can. A dividend is a portion of the company's profits that goes back to the investors. So if you buy a stock or a share in a company, you own a portion of that company. You are entitled to a portion of the profits. Simple. All right, we're going to look at Coca-Cola next. We're still looking at ExxonMobil. Okay, so this is the 90-day chart. Let's zoom in a little closer and take a look at the 30-day chart, because everything changes the closer you get. Okay? Look at this. 30 days ago, 110. Drops down to 105, shoots up to 111. Now, it would have been better to jump in here, the second, third day from the upside. But that was 2 or 3 weeks ago. Profit's already been taken. Okay, the profit's already there. Look at 105 to 111. That's $11. $11 on a $105 stock. That's over 10%. Okay, 10%, there's usually going to be profit taken. Profit taken means, I don't want to jump in now because the stock is going to come down. Because it looks like it should come down next. Where's the top? Don't know. It could be today. It could be tomorrow. It could be the next day. That's not a chance I want to take. Okay, I want the odds and probabilities in my favor. I want to make sure everything I do points to the profit sign. Okay? All right, let's keep on going. Okay, Andy Berto wants to take a look at Coca-Cola. Try to do cover calls for the next 4 weeks. Hold on a second. We'll take a look at that. What other questions do we have here? All righty, amigo. ¿Cómo está usted? ¿Está bien? No? All right, anyway. He just wanted, Coca-Cola. Okay, Coca-Cola. Take a look at the overall picture. Very first thing. It should take you 3 seconds. Literally 3 seconds. Are you ready? High, low, was, is, direction. Up, down. That's it. 3 seconds. Not that difficult. High, low, was, is, direction. Okay, maybe 3.5 seconds, maybe 4 seconds. But still, you get the point. So, the chart looks okay. All right, nothing to write home about, but let's take a look. What is the numbers? What are the numbers? 61.88 is the current price. The closest strike price to 61.88 is going to be 62. And the 62 is selling for 50 to 57. Terribly sorry, it's not 1%. It doesn't work for me. If you like it, fine, but it doesn't work for me. I want 1%. 1% on a $62 position is 62 cents. Okay, so now, Supia, how much is your account to trade your strategy? Well, my account has plenty in it. How's that? James, Riven, no. CRSR, no. Lost Wolf, superior, enough to do what he likes. Almost. Lost Wolf, almost like to do what I like. Like today, what did I do today? I spent about 2 hours. GIS. Ooh. Now, Takao 4444, GIS General Mills. I think they just changed to monthly. Yeah, they are monthly now. So no to General Mills. Sorry. Da-da-dum-dum. I'm joining Brian Dat. Oh, Bring Dad. That's a cool name. 100K Bull, Coney. Holy shit, you're one of those guys. I'll be disappointed if you don't look up Coney. All right. You ready? Now, this is going to be fun. Okay? 100K Bull. You ready for this? Are you seriously ready for this? We're going to pull up Coney, and you're not going to like what I have to say. C-O-N-Y. Are you... Uh-oh. Let's go back. C-O-N-Y. Ready? Here we go. Here's Coney. No. Why did I say no to Coney? It is a monthly. Now, let me see how many times I can explain this to you. 100K Bull. All right? Monthly. 12 months a year. That's it. 12. I can only trade it 12 times. 12. 1, 2, 12 times. Okay? If I'm averaging 1 to 2% every option trade I make, I can only make 12 to 24% on a monthly optionable stock. But wait, you're going to like this because it gets worse. It really does. All right. So here's the current price. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down. Now it's bouncing here. Great. Wonderful time to jump in. But wait. Let's go a little closer. All right, look at the last 30 days. Okay, 30 days ago was the high at 1640. Drops down to 1150. 2 days to the upside. Awesome time to jump in, right? No. Okay, so this option here, the top one, 17 January, has got 2 days left. How much can we make off of that one? It's currently at 13. The 13s is going for 15 cents, right? Okay. The 1309, it's going for 15 cents. I'm losing 9 cents right off the top. So what am I actually walking away with? Okay, so you take 9 off of 15, I'm walking away with 6 cents. So I'm making 0.5% for 2 days. Okay, not bad. However, let's go to 21 February. Now, at 13, I'm making 65. Well, that's nice. 65. Now, 13 goes into 65 5 times? No, 4 times. A little over 4 times. All right. No, 5 times. Yeah. No. Anyway, besides the point. So here's the thing. Okay? If I do this one, okay, I'll make 5% for the month. But here's the challenge. If this is 30 days, 16 drops, retrace, drops, retrace. Great. Now tell me where it's going to be in 30 days. Okay, because this here is 30 days. All right, see that? Tell me where it's going to be in 30 days. If you're wrong, you have to hold it. If I do this one here, 37 days I got to hold on to it. That's 6 weeks. That's not 1% per week. It's almost 1% per week, but not quite. Because you get right around, where are we? 1309. You take 9 cents off of this, you're making 56. So how often does 13 go into 56? 5 would be 64. Okay, I'm going to have to do my calculator. 56 divide 13. 4.3%. All right, so if I do this one here, okay, at the current price, 4.3% for the month. Not really, because I got to hold it for 37 days. Now, 37 days, how many weeks are 37 days? Well, not quite 5, because 5 weeks is 35 days. But that leaves me an extra day. So 6. Are you using the dividend as an indicator for... Absolutely, Can-Am. Not many people get it that quick. Okay, I'm using the dividend as a indicator. When is the dividend being paid? That was a good one. Not many people catch that as quick as you did. So the numbers just don't work. Because if I'm wrong, here I'm getting 0.5% this week. 0.5%. Next week I'm getting next option I'm getting 4.5%, but I got to hold it for 6 weeks. Yes, are you using it? Sorry, thanks. You're welcome. So not only does it not make 1% per week on average, okay, where's it going to be in 6 weeks? It's not that easy to pull out, all right? And it does, and the numbers just don't work. Okay, so why do I have to explain it all the time? The numbers just don't work for monthlies. But hold on, it gets worse. Believe it or not, Coney actually does get worse. So let's go to Yahoo Finance and put Coney in here. C-O-N-Y. First and foremost, Coney has only been paying dividends for, are you ready for this? 1 year and 1.5 years. That's it. That's it. The very first dividend was October 2023. So October 23 to October 24 is 1 year. 1 year, 3 months. Okay, the company is 1 year and 3 months old. That's it. So no. Why would you put all your money in a company that's not even 2 years old? Sorry, it's no. Okay, yeah, and I know what the yield is. And it's impossible for a 2-year-old company to continually pay out 81% yield. So what do you think they're going to do at a certain price, at a certain time? Well, look at the dividends. You ready? 121, 108 went down. 246, 269, 108, it went down. 166, 179, 279, 228, it went down. 170, it went down. 157, it went down. 101, it went down. 104, 111, 202, 134, it went down. 83, it went down. So out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15. 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 13 payments. 8 out of 13 are going backwards. 5 going forwards. 8 going backwards. How the hell can you tell me that is a good investment? Kenny Ann wants to take a look at May. I have no idea what May is. M-A-Y. Sorry, dude. May, M-A-Y. There are no dividends. Sorry. No. Okay, so 100K Bull. Terribly sorry, dude. No. Memdex. Never heard of them. Okay, Demetrius Jones. You actually got to give me the ticker symbol. Okay, user 5955718428627. Why can't your parents just name you Steve or Bill or Tim? Anyway, could you please explain a covered call in detail? Yeah, you buy a stock, you sell somebody the right to buy it from you at a certain price by a certain date. They will pay you a premium. That's it. If the stock is above the strike price in which you sell, you will be called away, cashed out, or whatever you want to call it, have all your cash back on Monday or whenever it gets called out. Intel needs to drop to 18-ish. Yep, I get that. LITM. Benjamin, never heard of it. No, they may cut that dividend. Okay, Can-Am, I have no idea which one you're talking about. You actually got to give me a more complete sentence. Okay, Intel, we already looked at that. We already looked at it. Benjamin, Litm. Never heard of it. So let's check it out. Litm. Yeah, hell no, dude. Coney, double hell no. Fang, no. Fang. 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 Okay, so here are the dividends for Fang. Are you ready? 2018. Now, 2018 to 2025 is only 7 years. Now, 7 years is not quite 20 now, is it? So why are we looking at it? Felix, 7 years of dividends. I didn't say increasing dividends. I just said 7 years of dividends. Coney, no options, no thank you. Well, I love Coney for dividends. Yeah, but Bull, it's not even 2 years old yet. You're giving your money to a 2-year-old and saying, here. And out of the 15 dividends it's paid, 8 of them have been backwards. Or is it more than 8 of them? I forget. I seen his name, IG. This is a different conversation. Oh. I'm not having a conversation on Instagram. Okay, my only conversation, well, I don't know. Homeboy, thank you. Advice how to start. Keep asking questions. Yep. Yay, that it. I have no idea what you're talking about, dude. But okay. Asked Mike last night when it was too late to answer. You ever go to Greece? Nope. I've been to Russia, been to France, I've been to the Riviera, been to Belgium, I've been to a lot of, Mexico and Cozumel and Haiti, and anyway, I've been to a lot of places. Okay, LITM. Didn't we just look at LITM? LITM. Yeah, no. QYLD. Oh, hell no. SCHD. Double hell no. Do you write cash secured puts for dividend stocks? Yes, I do. TikTok will be shut down on Sunday, hypothetically speaking. Okay? It won't be shut down. If you've been following the legislation, okay, it won't be shut down. You just won't be able to renew it. So I'll still be live on Sunday, Monday, and Tuesday. However, they have a few different rules. So we're going to be moving a lot of our stuff, if we have to, from TikTok to the other channels. So I got 5 Facebook channels, 1 Instagram channel, 2 YouTube channels, and then a bunch of other channels. Okay, it's like Rumble, Twitter, and Truth Social. So those sites I'll be moving over there. It probably won't have the same interaction, but we'll see what we can do. Okay, Happy in Jersey, RL. What the heck is RL? Ralph Lauren. No. Okay. Monthly. Monthlies don't work. Thank you. No, I'm just dumb. You are doing an outstanding job explaining. Thank you. Can-Am. That stock that was up and down with its dividend might be cut next year. Yeah, I'd cut it next year. I'd cut it this year. Hell no. You're not profitable. Why would you put your money? It's a valid question. Okay? A valid question would be, why would you put your money and your trust into a company that is not consistently profitable? It makes no sense to me. Okay, I'm a logical person, up, down, left, right, hot, cold, yes, no, those kind of things. Sweet Jones, James, I'm making this hard than it needs to be. Despite that, can you refuse the profit spread again? The profit spread? I'm not quite sure what you mean by the profit spread. Okay, because the spread is the difference between the purchase and the sale. Okay, so the bid is what you can sell it for. The ask is what you can buy it for. The spread is the difference between the two. The bid, $232.79. The ask, $248.85. Well, there's a difference between the two. That's called the spread. And the same thing with the options. The bid, $25. The ask, $95. The spread is the difference between the two. So I'm not quite sure exactly what you mean by it, but okay. Okay, I seen his name, Instagram. This is a different conversation. Okay, I'm not quite sure about that, but okay. What about Nike? What do you think? It's at support. Well, Ian Sendrak. Okay, well, let's take a look at Nike. I like Nike. NKE. It does look like it's at support. So let's take a look at the numbers. The high, 107. The low, right around 70. Where was it? Where is it? And what's the direction? You ready? Up, down, sideways. Big drop, up, down, sideways, drop. Now we're at 71. Okay, so we're at 71. What would most likely happen next? Well, for that, before I even go deeper into the chart, I want to take a look at the numbers. It's currently at 71.33. So the 71s are going for 102. Now, if I take 33 cents off of the 102, well, I'm looking at 89. Walking away with 89. 89 is more than 1% of 71. So I would do the 71. It's a safer trade. But is it the right time? Now the numbers work. Okay. What's the chart telling me? Well, this is the 1 year. We know what the 1 year is telling me. The 90 day, which should be right about here. Here's the last 90 days. 81 drops down to 73. Shoots back up to 81 and drops all the way down here to 70. Okay? And we have 1 day to the upside, and that was today. So let's take a closer look. 30 days, right there. Okay? So here's the last 30 days for Nike. So ask yourself the question, does it make sense to buy it now? Because 30 days ago it was at 79. From 79, it drops all the way down to 70. Today was a little higher. That's 1 day to the upside. So Nike actually looks good for next week. Not this week because we're just about done. But next week, I'm going to write Nike down for next week. Alrighty. QILD, hell no. Okay, Benjamin, LITM, no. QILD, no. PHO, Matt, what the heck is PHO? Matt, seriously, dude, did you even listen to what I said? Never buy something you don't understand. If you don't understand it, don't do it. Now, when I say weekly options only and you show me monthly options, it's one of two things. One, you don't understand what you're looking at, or two, you're not listening. One or the other. H, do you write cash secured puts for dividend stocks? Yes, I do. Lonnie, TikTok we shut down on Sunday. Yep, and we'll be moving somewhere else. Thank you. I wouldn't say you're dumb. It's just something new. That's like if you've never driven a car, sitting in a car for the first time, trying to figure out, that's a little complicated. Okay, fine, great. So you know how to drive a car. Do you know how to drive a tank? Well, we'll put you in the seat of a tank and we'll say, this is this, this is this, that's that. It won't take long before you figure it out. Okay? SEC filed a briefing. So what happens now with XRP? Well, okay, listen closely. Watch, Watu, is that right, Watu? once a company has been consistently profitable for 20 consecutive years, then I will consider it. So until XRP has 20 consecutive years of consistent profitability, then it will make my list. Okay, now understand a few things. Number one, the stock market has been around for over 420 years. Okay, it's not going anywhere. Number two, there's not, at this moment in time, wait, you know what? Matter of fact, let's take a look. Let's actually take a look. Now, we're going to go over to FinViz, the Financial Visualization. It's a website I use often to take a look at some information. Now, the screener, what I want to look at here is this number right there. 9,835 stocks. That's how many different companies you can invest in. 9,835. Last week it was 9,813. Well, now it's 9,835. They're adding more all the time. Do they make my list? No. They only make my list when they have 20 years of increased dividends. Okay? So, Matt King, PHO. All right, PHO. No. Yeah, Water Resources ETF. See, Matt, I understand what you're saying, okay? Now, I think the confusion that we're having here, Matt, you need a T-shirt with your rules on it. Yeah, I probably do. He said, Matt, I understand what you're saying. Really, honestly, I do, okay? It's an ETF that does water resources. Great, wonderful. You ready for this? I don't care. Monthly options, for me, never work. The numbers just don't work for me. Okay, so if you like it, hey, more power to you. You do what you think is right for you. For me, monthlies just don't work. I don't even bother with them. Now, I just told you 9,835 different companies. Well, the only ones I want to look at, are you ready? If you guys got a pencil and piece of paper, here's a tidbit of info. Here it comes. Dividend Kings. 54 companies that have increased their dividends for 5 decades. That's 50 years of profitability. Dividend Aristocrats. 67 companies that consistently increased their dividend payments for 25 years. That's a quarter of a century. Dividend Champions. 150 companies consistently profitable, increasing their dividends for 25 years. A quarter of a century. Basically the same as the the Aristocrats, but the rules are a little bit different. Okay, the Dividend Aristocrats are a little bit more picky. But still, 25 years of dividends. Coca-Cola, Colgate, Pepsi, Procter & Gamble, great dividend stocks. Yeah, Matt, they are great. They are on my list. 2 more lists. You ready? Dividend Contenders. 300 companies that have consistently increased their dividends from 10 years to 24 years. And then for the fun of it, we throw in Warren Buffett's list because we say, if it's good enough for Warren, it's good enough for me. Okay, Crypto Compass. What's the advantage of holo candles? There isn't. Amir, hi, how are you? What do you think about Bitcoin? Love the idea, just not quite ready yet. Hasn't even gotten to puberty yet. Finally, someone who actually promotes dividend investing. Well, Matt King, that's what I'm looking for. I'm looking for simplicity, profitability, consistency, and safety. That's what I'm looking for. I'm retired. I have no desire to go back to work. You like my smile? Thank you. Okay, Bill, AGNC. AGNC. Ooh, yeah. I don't like this one. Now, there's a reason why I don't like this one. Let me briefly explain. Now, this doesn't look that bad. Okay, high, low, all that stuff. But what I don't like, look at the numbers here. The price right now, $9.41. The closest strike price could be the $9.50s. It's going for 1 cent. It's going for 5 cents. Not 1%. But then if you miss, the very next one is 0. So if you're off just a little bit, you get nothing. I don't like that one. I like ones that have better premiums, like Intel. Watch this, INTC. Okay, take a look at Intel. Look at all the premiums. Okay, nice premiums all the way down. Okay, AGNC. AGNC. Okay, look. At the money, 1 cent. Everything else, 0.00000. Same thing here. At the money, 5 cents. Below that, 0.000. Yeah, no. The numbers just don't work here. The chart may look great, okay, but the numbers don't work. Sorry. Holy shit, it's 11:30. No more samples. Let's go through the questions and that's it. Okay. Oh, look at this. We're just about done. Absolutely no life or light behind those eyes. I'm not quite sure what you mean by that. Awesome. Thanks for the take on Nike. You're welcome. Why a stock has to be a dividend stock in your list of covered? Apex Hair. That's a good question. Okay. Now, let me briefly explain. Uh-oh. Matt's got a question. Hold on. Hold that thought. Matt, thoughts on Johnson & Johnson? Yep, love it. Pepsi, love it. Recent poor man's performance. I understand that we aren't dependent on the stock growth and more, so the dividend, but why do you think they are doing well to competitors? I couldn't answer that question. I'm not really into the business aspects. I'm into the... Okay, Matt, I'm not into the politics of business. I'm into the consistency of profitability. Okay, Johnson & Johnson, they've been in business for over 100 years. That other company, I forget what it was already. But they've been in business, Procter & Gamble, they've been in business for over 100 years also. They must know what they're doing if they're consistently profitable and they're consistently increasing their dividends. There has to be something to it. Is the company doing something right? Well, they must be. They consistently increase their profits every single year. Badu, when did you get into stocks? Oh, about 20 some odd years ago. And how long did it take you to be knowledgeable in stocks? About five years maybe. This past performance doesn't promise future performance. You're absolutely right, Matt. And I'm going to agree with you 100%. Past performance does not equal future profits, however you worded it. But you're right, it doesn't. But here's the thing. Sweet Jones, you're cooking tonight. That was the profit spread I was referring to. You did on AG&Z. Okay, thank you. See if I can explain. I forget what the question was. Damn it. Getting old is not fun. Let me see, go back to his question. Okay, but past performance doesn't promise future performance. Yeah, you're right, it doesn't. But however, okay, if a company consistently goes up at the beginning of the year, every single year, like Weight Watchers goes up at the beginning of every year. And we all know why. Yeah, you're right, Michael. Michael's right too, same thing. But if the company's done the same thing year after year after year after year, like why does Weight Watchers go up in the beginning of the year? Well, we all know why Weight Watchers goes up every single year at the beginning. Okay? Why does Hershey's go up in the first week of February? Well, because you got Valentine's Day, then after that you have Easter. Very close together, the biggest chocolate days of the year. Well, that's probably a good reason why Hershey goes up at the beginning of February. Certain stock moves predictably every single year. Would it be interesting to pick your brain further? I think we could have a fantastic debate. Thank you, Matt. Believe it or not, I had three long conversations. Now, I always tell people, you really want to have a conversation with me, send me a number, I will call you and talk to you. Well, I talked to 3 people today. One was 41 minutes, another one was almost an hour. That was a great conversation. And the other one was like 20 minutes. Now, usually I say, send me a number, I will give you a call. And we'll have a chat. Okay? I had a couple of great conversations today. Oh, Ben Hero. Yeah. I'm going to call you Ben Hero. I'm going to leave the VR out of there because I know what that means. I'm new to this, but do you hold a stock for a week? I prefer to hold it just for a week. How do I feel about, oh, hell no. Matt, that's something I would be interested in if anyone has a good Mike James. Okay, you got it. Okay, Dorkemon, yeah. Oh, realty, hell no. But I do. What's the most amount of money you made in 1 year with stocks alone? I think it was 93%. 1 year I made 93%. Now remember, I'm not looking to hit a home run. I'm looking for a simple, safe, predictable, consistent 1% per week. Now every once in a while I'll get 2, 3, 4%. But if you get that consistently, yeah, 93, 94% was the highest I've ever gotten in 1 year. Wait. Nope. Here we go. Let's go back to, here we go. Now, on my splash page, it shows all my trades. Okay, here's all my trades right here. So for this year, here's the profit and losses right there. So account 1, 74%, account 2, 63, account 3, 33. Well, each one averaged over 1%. But all the way down at the bottom, okay, these are all my trades for 2024. All the way down at the bottom shows you snapshots of my blog from 2011. You see that? I first started sharing my trades. Very first starting date. August 31st, 2011. I started out with, starting capital was $82,000. That's how much I started out with. Okay, I refinanced my home and took out $82,000, and this is what I did with it. All right. Now, the most I made right here was $120,000. That was 105%, but that was in 2012. Okay. But this is from 2013. Here's some of my other ones. And what is this one right here? 2013, 2014. No. What year was this? What the hell year was this one? I don't even know what that one. Oh, 2011. Okay, so I've been doing it for quite a while, and yeah, I make a nice amount. It's past 11:30. I'm going to turn into a pumpkin. You guys all have a great day. For those of you in the morning trading group, we will see you first thing in the morning. Have a wonderful day, everyone. And Joe Grunder, how are you today? I'm just getting ready to leave, dude. Sorry, you just got here. I'm here from 9 until 11:30. Okay? Have a nice night, everyone. Home. And done. And now the end is near. And so I face the final curtain. Come on, turn off. And so, thank you. You're welcome. I say it clear. I state my case, for which I'm certain I've lived.